In financial markets, numbers never lie. Independent studies and statistics reveal that as many as 80 to 95% of retail traders fail and lose their money within a short period of time. This figure is not just a dry data set. It is the clearest evidence of the brutality that the market inflicts. Behind every losing trade lies disappointment, the collapse of confidence, and often the evaporation of hard-earned savings in an instant. The market does not care how hard you work, how long you study, or how much hope you carry. It only cares about cleansing, eliminating, and devouring the weak. Meanwhile, smart money, the big players, not only survive but dominate because they understand the rules of the game. And in truth, they are the ones who write those rules. The harsh reality is that most retail traders step into the market with illusions of financial freedom, only to leave with a bloody lesson. The market is not made for the naive. In the financial world, there is a truth most retail traders will never accept. The market is not fair. It is not a place where everyone has an equal chance. It is a battlefield where those who hold power in capital, technology, and liquidity crush the weak. These forces are known as smart money. But do not be fooled by the elegant name. They are not only smart, they are ruthless, cold, and designed to exploit the dreams of naive traders. Who smart money really is. Smart money is not a shadowy myth. It is a collection of massive financial entities, investment banks, hedge funds, market makers, institutions that can directly move prices. They trade with billions of dollars, use technology operating at lightning speed, and leverage data that retail traders will never access. When a bank in New York wants to buy 1 million lots of EUR/USD, they cannot simply click a button like you. They need liquidity. They need someone on the other side of the trade, and that someone is you, along with millions of other retail traders. Retail traders, the perfect prey. Retail traders walk into the market carrying dreams of financial freedom. They believe a few indicators or a few candlestick patterns will make them rich. They think discipline alone is the key. But the truth is brutal. In the eyes of smart money, retail traders are nothing but liquidity pools. Every stop loss you set is their feast. They know you will buy the breakout of a high and place your stop just below the last low. They know you will sell a support break and hide your stop right above resistance. Every move is predictable, and every order feeds their machine. The golden rule of smart money. The only thing smart money cares about is liquidity. They need sellers to buy from and buyers to unload into. That is why markets often sweep stop losses before moving in the true direction. It is not an accident. It is a plan. What you think is random noise is actually a carefully scripted sequence directed by smart money. The 3 stages of manipulation. Every major trend follows 3 distinct stages. First comes accumulation, when smart money quietly builds positions at low prices while the crowd is disinterested. Then comes manipulation, the stage of false breakouts and liquidity grabs, where the herd is tricked into the wrong side. Finally comes distribution, when smart money unleashes the true move in their intended direction, after most retail traders have already been shaken out. This cycle repeats endlessly across Forex, equities, and crypto alike. The cold, indifferent smart money does not hate you, nor do they care about you. In their world, you do not exist. You are just a number in the system. When your account is wiped out, it is not a tragedy to them. It is simply a completed transaction. While you are fearful, hopeful, or in pain, they are scanning numbers, running algorithms, and pressing buttons. This is not a game of emotions. It is a numbers game, one driven by probability, statistics, and sheer dominance. The deadly illusions of new traders. One of the greatest mistakes new traders make is believing that a perfect system can beat the market. Retail traders chase the latest indicators, buy into strategies advertised as secret formulas, or believe a single course will unlock the path to wealth. But the harsh truth is this: no indicator predicts the future. No chart pattern guarantees profit, and no guru can shield you from the traps laid by smart money. Smart money never plays fair. You sit in front of your screen with a few hundred or a few $1,000s, believing you are competing on equal footing. Meanwhile, your opponents are institutions with teams of economists, access to massive order flow data, and technology that executes trades in fractions of a millisecond. When you place an order, they already see it. When you hide your stop loss, it is already visible in the order book. This battle was never fair. and it never will be. The brutal essence: smart money exists to exploit the crowd. The market is engineered to eliminate the dreamers. If you think it is the road to financial freedom, you have already lost. If you think a couple of indicators will make you rich, you are already prey. If you think the market is fair, you are deceiving yourself. Only when you accept that every price movement is orchestrated by large capital will you have even the slightest chance of survival. Conclusion: smart money is the invisible hand behind market movement. They do not teach you, guide you, or promise you anything. They manipulate and they hunt. To survive, you cannot trade like a naive retail participant. You must learn to read the footprints of large capital, to swim with the sharks instead of against them. That is the brutal truth every trader must face if they wish to remain in this arena. The mechanics of market manipulation. Most retail traders believe the market moves because of news, indicators, or some magical chart pattern. That illusion is the perfect cover for smart money to operate in silence. The true engine behind every violent swing is not news, not fundamentals, not Fibonacci lines. It is liquidity. Smart money manipulates price with surgical precision to harvest that liquidity, and the crowd never notices until their accounts are already bleeding out. How liquidity is manufactured. Smart money cannot enter the market the way you do. Their orders are too large, too heavy. If they were to buy all at once, the market would explode upward before they even finish, leaving them with poor fills and exposing their intentions. Instead, they manufacture liquidity. They create the illusion of movement in one direction to lure the crowd into providing the opposite side. This is the blood they need to build positions quietly. When you see the market suddenly spike into new highs or collapse into new lows, most retail traders scream, "breakout." In reality, it is bait. The crowd piles in, stops are set tight, and then the market snaps back in the opposite direction. What you thought was the start of a trend was nothing but smart money collecting your stops. Stop hunting as a business model. Stop hunting is not an accident. It is the business model. The collective stops of millions of traders are like pools of fuel scattered across the chart. Smart money knows where these pools are: above resistance, below support, around round numbers, at the highs and lows of the week. When they need liquidity, they drive price directly into those pools, scoop up the orders, and then reverse without hesitation. Every time you wonder why your trade was stopped out by a few ticks before the market went your way, you are staring at manipulation in its purest form. It was not bad luck. It was the system working exactly as designed. False breakouts, the perfect trap. False breakouts are one of smart money's favorite weapons. They push price beyond a well-known level to trigger breakout traders, force stops, and generate liquidity. Then, just as the herd believes the move is real, the price reverses violently. The crowd is trapped. Those who chase the breakout are instantly underwater. Those who were stopped out try to re-enter, adding more liquidity for smart money to feed on. A false breakout is not a mistake of the market. It is the trap. It is engineered to clean out both sides of the retail crowd in seconds. The game of liquidity zones. Every chart has liquidity zones, areas where smart money knows orders are clustered. These zones are not random. They are the exact highs and lows retail traders obsess over. They are the levels analysts shout about on social media. They are the obvious double tops, the picture-perfect support lines, the psychological numbers like 1.200 or 2000. These are magnets for price because they are magnets for liquidity. When the market approaches these zones, retail traders brace for breakouts or reversals. Smart money braces for a harvest. They push price just enough to trigger the stops, just enough to trap traders in, and then they move the market in the opposite direction. What looks like chaos is actually precision, the accumulation of losers. Another brutal truth: the market does not move when winners pile in. It moves when losers accumulate. Smart money thrives on positioning retail traders in the wrong direction. They manipulate narratives, create fake momentum, and lure traders into late entries. By the time the majority is confident, smart money is already positioned the other way. This is why news releases often create violent whipsaws. It is not about the data. It is about creating maximum confusion, forcing both buyers and sellers to expose their stops. The real move comes only after the crowd has been whipsawed into exhaustion. Time manipulation, dragging traders to death. Smart money does not only manipulate price, they manipulate time. Sometimes they will hold the market in a tight range for days or weeks, draining retail patience. Traders stuck in boredom either quit early or place reckless trades out of frustration. Then, when most have given up, the breakout comes, leaving only smart money prepared. The market is designed not only to take your money, but to grind your spirit. Price is only one weapon. Time is another. Psychology as a weapon. Every manipulation is built on psychology. Smart money understands the herd better than the herd understands itself. They know fear will force you to cut winners early. They know greed will push you to double down on losers. They know the thrill of chasing breakouts and the despair of watching stops get hit. They weaponize human emotion to ensure you provide liquidity at the exact moment they need it. The chart is not just a graph of price. It is a mirror of collective human weakness. Smart money writes the script, and the crowd follows blindly. The illusion of randomness. Retail traders comfort themselves by saying the market is random. That excuse protects their ego when they lose. But smart money knows better. The market is not random. It is manipulated structure. Liquidity pools, stop runs, false breakouts, and time traps are not accidents. They are the blueprint. What feels like randomness to the uninformed is clockwork precision to those who understand manipulation. Why manipulation never stops? Manipulation is not a side effect. It is the foundation. The market cannot exist without it. Without manipulation, smart money could not fill massive orders. Without hunting stops, they could not create liquidity. The very structure of the market requires the weak to be sacrificed for the strong to profit. This is why manipulation is not a phase of the market. It is the market. Conclusion. The mechanics of market manipulation are merciless. Liquidity pools, stop hunting, false breakouts, and psychological traps are not rare events. They are daily rituals. Every candle you see, every spike, every fake breakout is part of a design to transfer money from the many to the few. Retail traders want to believe in fairness, in technical patterns, in the idea that discipline alone can save them. But the truth is ruthless. You are playing a game built to make you lose, unless you learn to see through the manipulation and align yourself with the sharks who orchestrate it. Market structure through the eyes of smart money. Market structure is not those messy lines of support and resistance that retail traders draw all over their charts. It is the real language of big money. Every break of a high, every sweep of a low, every gap left behind is a signature of smart money. If you cannot read this language, you are prey. The essence of market structure. Most new traders see the market as nothing more than a random sequence of candles. They draw trend lines. They worship Elliott waves. They fall in love with pretty chart patterns. But smart money does not trade triangles or pennants. They read structure. They look at where the flow of capital has broken the old order to establish a new one. That is where true control is revealed. Break of structure and change of character. Two core concepts in the smart money language are break of structure, BOS, and change of character, CACH. When price breaks a significant high or low with strength, that is a BOS, a signal the market is continuing in its current direction. When price breaks in the opposite way, flipping the structure, that is a CCH, a signal that the script has changed. Retail traders often jump in at the sight of a BOS, thinking it is a real breakout. But to smart money, a BOS is just confirmation that they still control the market. A choach, however, is when the real power shift begins. Misread it, and you will be wiped out instantly. Order blocks, the unerasable footprints. Order blocks are the zones smart money leaves behind when they accumulate or distribute. They are not some magical candlestick like retail forums love to worship. They are areas where institutions loaded massive orders, enough to pivot the trend. Once price leaves an order block with force, that zone becomes the place smart money will return to in order to refill positions. Retail traders get fooled by dozens of fake OBs on the chart. They believe every red candle before a rally is an order block. The brutal truth is that only a few zones truly carry institutional weight. To spot them, you must see the bigger structure, with BOS or TOCH confirming it. Otherwise, you are just praying to hollow candles. Fair value gaps, scars of the attack. Every time smart money strikes hard, the market often leaves behind an imbalance. a region where price did not trade fairly in both directions. This is the fair value gap, FVG. It is the scar of their assault. Smart money knows the market will often return to partially fill that void, giving them a chance to add more orders. Retail traders see an FVG and rush in blindly, thinking it is a golden signal. But without combining it with BOS, choach, and order blocks, an FVG is just another trap waiting to swallow them. Accumulation, manipulation, distribution. Smart money market structure runs on three merciless stages. Accumulation. They quietly build positions, usually in long, boring ranges that bleed retail patience. Manipulation. They trigger false breakouts, sweep stops, and stir crowd emotions to harvest liquidity. Distribution. They drive price strongly in the true direction, while the herd is trapped the other way. This cycle repeats endlessly. It never changes. Retail keeps getting played because they cannot see that sideways is simply the launch pad for the next manipulation. Support and resistance, the sweet illusion. Support and resistance taught in beginner books are liquidity mines for smart money. The more traders draw the same line, the more stops cluster there. That is where smart money hunts. Every time you think this is a strong resistance, you are marking the kill zone for the sharks. The multi-timeframe trap. Smart money does not glue themselves to one chart like retail staring at M15. They dance across timeframes. On the daily, they lay traps. On the hourly, they launch assaults. On the minutes, they wipe out the small fish. If you cannot align structure across timeframes, you will always be lost in chaos. The market as a hunting machine. When you look at charts, you see candles. When smart money looks at charts, they see blood flow. Every spike, every wick, every gap is evidence of a hunt. Market structure is the blood map. Fail to read it, and you become the blood feeding the system. Conclusion. Smart money market structure is not a tool. It is the operating system of the entire game. BOS, choach, order blocks, fair value gaps. They are all doors leading to the same truth. The market is designed to drain liquidity from the weak and hand it to the strong. Those who still draw support and resistance and pray before breakouts will always be victims. Those who learn to read structure, to think like smart money, are the only ones with a chance to survive this blood-soaked game. Psychology and the game of illusions. If you think smart money wins only because of massive capital and advanced technology, you are wrong. Their strongest weapon is not numbers, it is your mind. The market is not simply a place to buy and sell. It is a psychological battlefield where the crowd is always the loser. Smart money does not just hunt stop losses, they hunt your weaknesses. The market as a stage. Think of the market as a theater. Smart money is the writer, director, and producer all at once. Retail traders are extras, clueless about the role they are playing until the curtain falls. Every price swing, every shakeout, every rise and fall is designed to trigger an emotional reaction. And once you react, you are finished. The illusion of choice. New traders believe they have free will. They think they buy because they see an opportunity. They sell because they read a signal. The brutal truth is, most of those decisions were scripted by smart money. When they engineer a false breakout, you think you chose to enter it. When they keep price locked in a boring range, you think you chose to give up. Freedom in trading is an illusion. Most of your actions are pre-programmed by their design. Trading as an addiction. One of the cruelest illusions is turning trading into a drug. A small early win hits like dopamine, convincing you that you've cracked the code. Then the painful losses keep you clinging to hope, waiting for a reversal to recover. What you do not realize is that smart money designed this cycle. Small wins to bait you, big losses to destroy you. The market feeds you hope, then cuts you open in one blow. The illusion of fairness. Perhaps the most dangerous belief among retail traders is that the market is fair. They think everyone has the same chance, that hard work, news, and a few indicators will level the field. Fairness is a comforting lie. The market was never fair. It was built to give smart money absolute advantage. You are not just losing because you lack skill. You are losing because the rules themselves are rigged against you. The illusion of skill. Many traders believe their wins come from skill, but most of their tiny profits are just scraps that fall off smart money's table. You may win a few trades, even a few weeks, but the moment you believe you are now a pro trader, the market will crush you. Smart money knows exactly when the herd gets overconfident, and that is when they tighten the noose. Fear, greed, hope, despair. The market only needs four emotions to control every retail trader. Fear makes you take profits too soon. Greed makes you hold on too long. Hope keeps you from cutting losses. Despair drives you into reckless revenge trades. No advanced tools are needed. Smart money simply pushes price to trigger these feelings, and you will self-destruct. The illusion of certainty. One of the deadliest traps is the belief that you can find a sure setup. Smart money knows the herd craves certainty, and they provide it with familiar patterns: head and shoulders, triangles, engulfing candles. When the crowd sees these setups, they believe the future is predictable. But that is exactly when smart money uses the pattern as bait. The more familiar the setup, the more perfect the trap. Control through information. Smart money does not only manipulate price, they manipulate information. Headlines, analyst opinions, calls to buy gold now or short oil immediately. Most of it is just noise serving a bigger plan. By the time information reaches you, the market has already moved. The crowd reacts. Smart money harvests. Believing that news gives retail traders an edge is just another illusion in this game. Psychological destruction. The most brutal damage smart money inflicts is not taking your money. It is breaking your spirit. After a string of losses, you don't just lose capital, you lose confidence. You start doubting every decision, spiraling into anxiety and obsession. In that broken state, you are the easiest prey. No conclusion. The market is not just an exchange of value. It is a factory of illusions, built to manipulate human psychology at the deepest level. Smart money does not need to force you. They only need to show you what you want to believe. You will walk into the trap, hand over your money, and beg for another chance in the same cycle. Only when you realize that every emotion in trading is weaponized against you will you have a chance to break free from this merciless game of illusions. Trading strategies that follow the footprints of smart money. Retail traders always believe they have free choice. They think entering a trade is a personal decision, that profit or loss comes from skill. The brutal truth: every move on the chart has been scripted by smart money long before you clicked buy or sell. But not everything is hopeless. Large capital leaves footprints, and if you know how to read them, you can step into this game not just as prey, but as a predator, reading order flow in the trail of money. Order flow is not just lifeless volume bars. It is the bloodstream of the market. Smart money leaves behind imbalances and fair value gaps when they push huge orders into the system. A sharp trader does not see candles as isolated movements, but as part of a continuous flow, where pressure between buying and selling leaves undeniable traces. Once you learn to read that flow, you are following the trail of giants. Multi-time frame. Filtering the real signals, smart money can manipulate a small time frame, but they cannot erase the larger trend. If you stare only at a 15-minute chart, you see nothing but noise. On the daily or weekly chart, you see the true structure. Break of structure and change of character on higher time frames are the compass. Retail traders drown because they get trapped in short-term ripples, while smart money sails with the tide. Survivors know they must study multiple time frames to separate noise from truth. Priority entry zones, order blocks, FVG, liquidity pools. Smart money never acts at random spots. They leave order blocks, zones where they accumulated injected capital and therefore will likely defend. When price returns, it becomes a battlefield. Liquidity pools are the stop-loss clusters, the treasure chest of liquidity smart money needs to fill massive positions. And fair value gaps are imbalances, the scars left when price was forced too far too fast without equilibrium. Together, these three elements form the map. If you want to trade with smart money, you must know that the real opportunities live in these zones, not in indicators. Risk management, the law of survival. Do not delude yourself into thinking that following smart money means winning every trade. Even if you read the footprints correctly, failure is always possible. The difference is that smart money never bets everything. They scale in, they allocate, they survive. Retail traders lose because they want to win big instantly. They go all in and get slaughtered. Professionals survive because they treat small losses as the necessary cost of staying alive for the big strike. This game is not about avoiding losses. It is about making sure those losses never kill you before the real opportunity arrives. Comparison: indicator-based versus smart money price action. Trading with indicators is like driving by looking in the rearview mirror. They only show you the past. They never reveal what the flow of money is doing right now. Indicators are programmed to react, while smart money price action reads the cause. The indicator trader stares at RSI, MACD, or Bollinger Bands to guess. The smart money trader reads order blocks, liquidity pools, and FVGs to understand. One side chases the effect, the other follows the source. The harsh truth: in the long run, indicators will leave you trapped with the herd, while smart money price action gives you a chance to stand with the ones who design the game. Final words: following smart money is not the easy path. It is not for the impulsive, the addicted, or the dreamers searching for certainty. It is a cold path where you accept small losses to secure big wins, where you wait like a predator, where you understand the market was never fair but still choose to survive. Shadowing smart money will not make you smart money, but it will keep you from being another corpse on this battlefield. Reality and common mistakes. The smart money concept has turned into a trend. Hundreds of courses, YouTube channels, and online communities have mushroomed, promising to teach you how to trade like institutions. The brutal truth is that most traders dive into it and still blow up their accounts, not because the knowledge itself is wrong, but because they misunderstand it and misapply it from day one. Misconceptions when learning smart money concept. The biggest misconception is treating smart money concept as a holy grail. Many believe that learning a few terms like order block, liquidity pool, and fair value gap is enough to guarantee profits. They think smart money is a secret formula that the rich don't want you to know. But smart money is not a formula. It is a lens to view the market. If you approach it with the mindset of finding a fail-proof system, you are already walking into the game with a losing mentality. Why most retail traders misunderstand order block. An order block is not a colorful box on your chart. It is not a guaranteed buy or sell zone the way online communities often advertise. Smart money executes massive orders, leaving footprints. But not every order block carries weight. Most of the boxes you draw are illusions. Retail traders mark them everywhere, treating every reversal as an order block, and then cry when price slices through mercilessly. The reality is that only a few order blocks are born from true institutional flow, and it takes discipline, training, and years of screen time to spot them. Most retail traders will never commit to that grind. Why copying smart money is never easy. Another deadly mistake is thinking you can simply copy smart money and succeed. They forget one brutal fact. Smart money has advantages you will never have. They have deep pockets, privileged information, and the ability to bend crowd psychology. You cannot replicate those advantages. The same footprints that smart money uses to control the market are crumbs for you to follow. Blind copying only makes you a weak, late version of a giant. The path to turning smart money into a personal system. The only way to survive is to turn smart money knowledge into your own trading system. You do not need to be smart money. You just need to read their footprints and integrate them into your trading style. That means choosing a time frame that fits you, defining clear entry, stop loss, and profit targets aligned with your capital and psychology. The smart money concept is not something to copy. It is a framework to understand how the market truly works. When you personalize it into a system, it becomes sustainable instead of another shiny illusion. Final words. The reality of smart money concept is not as glamorous as what is being sold to you. It is not a magic key, not a guaranteed system, and definitely not a shortcut to wealth. It is simply a way to see the ugly truth. The market is manipulated, the crowd always loses, and the footprints of big money are the only clues you have. The biggest mistake is believing that learning smart money will make you smart money. The correct approach is to learn how to read them, understand them, and build your own system to survive in this cold-blooded game. The survival map for retail traders. The market does not forgive the weak. It shows no mercy for impatience, illusions, or greed. For retail traders, survival is the first rule. Profits are only the reward if you stay alive. This survival map reveals the paths through the swirl of smart money, helping to avoid the traps that snare most traders. Survive before you profit. The first principle is simple. Do not die on the market. Cut losses strictly. Manage risk according to your capital and psychology. Never go all in on any opportunity. Retail traders often ask, how much profit is enough? The correct question is, how do I survive? Preserving capital is the foundation for continuing to trade and learn. Losing everything is a fatal step from which no strategy can save you. Reading smart money footprints while staying disciplined. Following the trail of large capital is a survival skill. Order blocks, FVGs, liquidity pools, and multiple timeframes reveal the reasons behind price movements. But skills are worthless without discipline. Do not enter trades out of desire. Do not hold trades out of greed. Do not chase losses blindly. Smart money creates illusions. You must remain sharp enough not to become prey. Personalized trading system. The survival map is not about copying smart money. It is about transforming knowledge into your own system. Choose timeframes that suit you. Define entry points, stop losses, and profit targets according to your capital and temperament. Record, backtest, optimize, and follow discipline. This is the only way to survive long term. Retail traders who endure accumulate experience and learn to distinguish when the market truly trends and when it is a trap. Psychology as the ultimate weapon. No technique is more important than psychology. FOMO, hope, fear, and greed are the weapons smart money uses to manipulate the crowd. The only way to survive is to recognize them, control your reactions, and act according to your plan, not your emotions. This is the difference between those who survive and those crushed by the market.